Quick favor before we start: if you like weekly stock updates and real portfolio transparency, hit like, subscribe and comment your take on the stock this week. Alright, welcome back to the series where I buy 10 shares of I swear the editors have a sniper trained on that word. Let's get into the update. So this week was rather choppy, I would say. More on that later. We are already on number 7 in this regard. So yeah, we've been doing this for 7 years, for 7 weeks up until now, which is, well, quite a bit in terms of PayPal, at least, since much can change in that short time. More in that regard later. So let's start with the usual, which is the comments. In this case, I've heard you, I've seen your comments saying great to see me featured. You're probably right about the honey situation. I guess it's potentially part of the story. Honestly, staying low for an extended period isn't necessarily a bad thing. The company will absorb a huge amount of shares out of circulation, and when repricing eventually happens, it could be massive for the stock price. During momentum runs for PayPal, PayPal will likely trade above fair value, just as it's been trading below fair value. And honestly, I couldn't really agree more. I very much think so. And if we take into account that the company in itself stays healthy, meaning growing revenue, growing earnings, growing everything, you could say, then this will be happening. It's not a matter of if it's happening, it's going to be a matter of when, and it's going to happen. Of course, given the PayPal, the company stays healthy. If it doesn't, if margins continue to shrink and sales per customer stay the same, then that would mean that the company becomes less profitable, and then it won't rise, obviously. However, I personally think it's going to rise as both sales per customer, earnings, all those very important figures will grow in the long term, and I even think that the amount of active accounts will grow in the future as well. So I'm going to name more about that in the future too. However, that is something we are going to have a look at in a later part of this video. So next few comments. $137 soon. PayPal. You and me will celebrate the day PayPal becomes PayPal once again. Yep, agree on both parts. I will celebrate when PayPal becomes PayPal. However, until then, I'm lucky to get lots of cheap shares, and I'm not yet finished in accumulating in the regards of the stock. So yeah, I can't really say all that much in that regard. Meme of the week is not going to happen this week, since it's just the same situation as last time, and I don't want to show you with the same memes every single week. However, in terms of stock price, we did get an update. It's at $56.89, which I think is the lowest we've seen since starting this series, which once again is a new all-time low in this portfolio. So as you can see, in regards to the PayPal purchases, I did stock up on my PayPal shares. As you guys know, last time I couldn't really get any shares, so this was at 0. However, this week I did get 15 shares, so more than last time. I was expecting the price to slowly go up again. I didn't expect we would go lower this week. So when I saw the stock trading at $57, I hurriedly bought into the stock. I think it was Monday or Tuesday, so very early into the week, which is quite unusual for me. However, as I did think we wouldn't really trade any lower than this, I bought right into it, thinking, oh my god, I can get this for such a cheap bargain. $57, that's a steal, so let me just pick up 15 shares. Yeah, that was basically my mindset in that regard. So next, historical stock price of the PayPal stock. At the the time we're recording this video, we are indeed a bit late in this matter. It's the 19th of January, so the price is still from the 17th of January, so still the Friday price. However, we are a bit late with this week, as with this weekly update, because I was a bit late and didn't have much time on the weekend. Current price is $56.89. Very low, lowest ever, as you can see. Current price is super low right now, and the weekly percent once again going more than 1% lower, which is quite a bit on just a weekly basis, especially since we have been going lower ever since the past weeks, you could say. So a total accumulated percent change of 8.65% since starting this video series. Like, if we take the first video date into account, which is $62.28. Obviously, we are not down 8.65%. We are just down, I think, like 3 or 4%, something like that, since we continuously bought into the stock. However, I do want to mention that if you have bought 100% of your shares on the first airing of this video, then you would be down 8.65% up until now, which is quite a bit, honestly. So let's have a look at the PayPal portfolio net worth. So on a weekly basis, we made our second biggest loss so far, which is $45.40, which leaves us with a total loss unrealized of $155.60. And now I have to say, over the last 3 or 4 weeks, this did accumulate to quite a bit. I didn't expect us to go down or to be in an unrealized loss area of $150 this quick. I did expect to trade quite low for a while, but I didn't expect we would see $57 or even $56 actually this soon into the series. So that's something I'm quite surprised of. So didn't expect that. Not a big deal, not a big number, so it's all fine and cool, but that's something to take a note of. So let's get into the dividend part of this. As you guys know, I haven't received a single dividend so far. I'm going to make a separate update on this once we get one, once it arrives. So this is just the projected dividends so far, which we are expecting. So currently PayPal pays out 14 cents per quarter. Considering we own 65 stocks so far, this leaves us with a quarterly dividend of $9.10, which is a projected yearly dividend of $36.40, or if we break it down on a monthly basis, a monthly dividend of $3.03. And I honestly think we went up quite a bit in the past weeks, so we doubled our projected dividend since a few weeks ago, as you can see here. So we went from $1.40 to now over $3, and just on a weekly basis it looks like we made quite the big jump, so I'm very happy about that. But now sorry, I had to sneeze. I hope you didn't hear that, otherwise yeah, I apologize. Let's get into the news. Nothing too significant has happened, however it did lead to some pressure. So first of all, we did see some analyst pressure in this regard. So lots of analysts actually downgraded PayPal, or at least downgraded their price target. I did announce this a couple of weeks back, that I'm going to expect these downgrades very soon from lots of analysts, because this is what naturally happens every single time when a stock goes down and the first analysts start to downgrade the stock, slashing their price targets by a huge degree. It usually takes just a few days or a few weeks for all the other analysts to cut their price targets too, and this is basically what has been happening over the past weeks, and that usually leads to a bit of more pressure on the stock itself. So Daiwa, Compass Point, Piper Sandler and Stevens, they all slashed their target price. So with Daimler, I think they were downgraded to neutral. Formerly they were at outperform, and the price target was cut to $61 from formerly $77, which is quite the big price target slash in this regard, which I can't explain to myself honestly, and it doesn't really make any sense. They did cite stronger concerns about market share losses in branded checkout, and they were expecting the valuation to stay depressed until checkout volume growth improves. However, this doesn't really make much sense to me, because PayPal is buying back their share, their stocks. They buy back about like 10% per year. So if you take that into account, it doesn't really make sense to slash the price target by like 20% when they are buying back 10% of the entire stock. Like, I would definitely agree with this if their branded checkout was like declining by like 15% a year, then I would agree. But it doesn't really make much sense when everything grows in a way, or at least stays sort of consistent, and then they slash the price target by 20% when they buy back 10% of their stocks. So doesn't really make much sense to me, but it does make sense if you consider what I said before, which is that the analysts just are following some sort of herd mentality where they just do what everyone else does, and that this slashing the price target. So Compass Point, yeah, they adjust the price target to $55 and they maintain the sell stance. I don't really know, it doesn't really make much sense either, but when you're already at a sell, then yeah, that doesn't really matter all that much. Piper Sandler maintained the neutral, so no big deal. They did adjust the price target from $76 to $74, so they lowered by $2. That's alright, I suppose. If you really have some concerns, you can do that, but I don't really see much sense in adjusting price target this low. Yeah, whatever. Stevens, they did cut the price target quite a bit as well, almost 20%, from $75 to $65. Quite a bit if you ask me, but they maintained the equal weight rating. That's alright, I suppose. It does feel like PayPal faded a bit back into the mid 50s due to some analyst pressure as well. The overall sentiment doesn't feel good at all right now. Everyone feels a bit depressed, even though I have a different opinion on PayPal, but the overall sentiment does feel a bit depressing right now. So yeah, I think you should all just accumulate right now. No financial advice as always, but I think right now is a very good time to accumulate PayPal stock. I think it's an amazing price right now, and I think it's hard to make a loss at this price point, honestly. So yeah, that's with the analyst. Forbes actually made an interesting article on PayPal. You can just Google it and open it if you like. They basically made an article saying PayPal is doubling down on international expansion, and in there they were mentioning that PayPal is growing quite a bit in Europe, and that they also expand to Africa and the Emirates. So all in all, if all the investments into Africa and the other countries shows fruits of growth, then this could work quite into PayPal's favor, since some of those markets haven't really been penetrated all that much by their competitors. So PayPal does have quite a bit of room to grow, and PayPal enjoys quite a bit of trust with most people abroad. So I do see PayPal in a pretty good position to grow in all these foreign countries, which could also be China or India in terms of PayPal world. So PayPal does stay on course in this regard. The prospects do look strong even in Europe, but especially in like Brazil, Middle East and Africa. So all these new investments they've made in these markets are very likely to pay off. and that's basically what the article is about. Highly recommend you take a read. Nothing too important, but it does feel good to read something good about PayPal every now and then. Yeah, they did lease an office in New York and made a 10-year contract. Not really anything newsworthy, honestly, but I do think that this heavily weighs into the perspective that PayPal is looking long-term, because they did sign a new contract of a 10-year lease, and I think it was like 261,000 square feet, so doing that in Hudson Square, and they're moving in like 2027. I do feel this feeds into the PayPal is investing and expanding footprint, and I do feel that PayPal looks to grow in the future, because otherwise why lease such a big place? Yeah, so that's pretty much it for the big news. Basically, PayPal has been stuck in the high 50s, or right now in the mid 50s. Nothing all that important that has been happening, but yeah, that's pretty much all for this week's update in regards to the news. So nothing too important happened, but in my opinion, the most important factor, PayPal is very cheaply valued right now. You can buy it, you can accumulate it, and you won't really go wrong long term. Historically speaking, we are at like the cheapest point that PayPal has ever been, while at the same time making the most amount of money they've ever made. So in a way, that's a no-brainer. There are risks to this investment, but in my mind, the opportunities largely outweigh the risks, because the risks in here are largely that PayPal is losing market share in branded checkout, which is a very small risk, or a medium-sized risk, whereas the opportunities are very huge, which is becoming a new type of company that makes money in an entirely different way, through advertisements, which is basically the big or the best money maker in this entire market, after AI maybe, so that's huge. And if I'm willing to bet at these odds, then I think you might think about it too, because I think the odds are greatly in our favor. So with that, I'm going to end this weekly update. Hope you guys enjoyed. Let me know your opinion in the comments, be it good or be it bad. Let me know about your current sentiment. Is it good? Is it bad? Do you think? Are you close to selling? Are you close to buying more? Let me know. I'm really interested to see, and of course I'm going to cover it in the next episode of PayPal Weekly. Thank you guys for watching, and goodbye.